Gold has been stuck in a trading range for anybody who's been following it day to day, but I have with me today the former U.S. Mint Director and Chief Strategist of Morgan Gold, Ed Moy, to talk about some of the risks that long-term investors should be looking at. Ed, thanks so much for being with us.
Joe, always great to be with you.
So Ed, when you're looking at major long-term factors that long-term investors of gold should be looking at, what are they?
I think there are three of them. The first one is quantitative easing. Sure, it's tapering, you eventually get to zero, but you also have to worry about how to unwind $5 trillion of stimulus. They haven't figured that out yet. It's an experiment that we need to see where that goes. Number two is there's a greater geopolitical risk these days. Not only did the Ukraine situation make us more aware of that, but you also have Iran that's moving more toward a nuclear capacity. You also have China flexing its muscles in the South China Sea. And then third, you have a lot of talk about whether or not there's a stock market bubble and whether or not there's a major correction coming down the pike. I think those are the three big things that could really move gold over the next year.
So let's turn away from the long-term risk or the long-term look and pull back to bullion, right?
Mm-hmm,
The base of what many people know of gold. You were the former U.S. Mint Director. When people are wondering if they should invest in gold, they are wondering, is bullion worth owning as an investment? I mean, what do you say?
Yes. Well, for most people, and it's going to depend on each individual's investment goals, but for most people, you ought to have a little bit of your portfolio diversified into tangible assets, and gold is one of the best ones that you can do, mainly for the reason that gold might fluctuate around a narrow band, but unlike stocks or bonds or even cash, it's never going to be worth zero. It's always going to be worth something.
Now, you have a couple of coins with you right now.
I do.
People are probably going to worry. I mean, you can show us you have what,
right here. So I have a 22-carat American Eagle, and I have a 24-carat American Buffalo. These are, the Eagle is the most popular 22-carat gold bullion coin in the world market today, and the Buffalo is one of the most popular 24-carat gold coins. When individual investors buy gold bullion, they're buying government-made bullion coins, and these are the ones that they're mostly buying.
And why? I mean, a lot of people might think it's ridiculous to buy gold coins, but why wouldn't it be?
Yes, so there's a lot of different ways that you can buy gold, jewelry or bars, but coins are made by governments, and governments like the United States guarantee that there's 1 ounce of gold in those coins. And so with that, if there's less, you can turn it back into the government and get a coin that does have 1 ounce in it. Second, these coins are standardized. So the Cougarans look the same since it came out. The Eagles look the same since 1986. There are huge volumes that have been bought, 40 million ounces of Eagles since its inception of the program. So we're widely recognized, easily fungible, very liquid.
All right, Ed, holding $2,600 worth of gold in his hands. Thanks
yes,
as always.
And these are not free samples from the Mint today for you. So.
Well, Ed, as always, we appreciate having you in.
Great, good to be with you, Joe.
That's Ed Moy. He's the former U.S. Mint Director and the Chief Strategist of Morgan Gold for TheStreet in New York. I'm Joe Deaux.